Emerging markets. They're going out of fashion, with some investors abandoning the asset class entirely. But the term is a broad brush. To try and paint in some finer detail for us to consider, we're joined by Arjun Divecha of GMO, a long-standing investor in emerging markets. Arjun, thanks for joining us.
Thank you.
So I think to start off with here, we've got a chart of the famous BRICS: Brazil, India, Russia, and China, which gives us some context for international investors. And when you look at sort of two of the main markets, in dollar terms at least, India and China, it's a long way to get right back where you started.
That's right.
So perhaps you could tell us what you think of the BRICS is sort of the most interesting at the moment.
We're starting to get quite bullish on India from an economic point of view, and we think that basically it has to do with the fact that the economy is in the right part of the cycle. That essentially you have a situation where, from a fiscal point of view, the government has started to get the budget under control. You have monetary policy, which is also well under control, and in fact, with inflation having come down, there's a lot of scope for monetary easing. And finally, with oil prices coming down, it gives the government a fair amount of money that it would not have otherwise had to spend on infrastructure, and therefore kickstart kind of the development process.
So can India do what China did and in effect spend its way to growth through just investing in enormous amounts of infrastructure?
It could, but it won't.
So where does that leave us? I mean, because we've heard talk of reform in India for quite a long time.
Yes, so I don't see this as a big secular change. I think that what we have in India is a cyclical opportunity where things have been bad for a while, and so there's pent-up demand. So all the positive factors that I've talked about, in some sense, lead to a place where you get a cyclical bounce. But I don't think that you get, 30 years of 10% growth. I think you go up from 4 or 5% growth today to 7 or 8%. But then eventually that will run out of steam and come back down. So I think it's a cyclical bounce, not a big secular shift.
And of course, we've got the sort of the comparison, which is natural here, to China. So in terms of China, it's all about reform there as well. How do you see that?
So the way that we see China is to think of China as being like a forest where the government has allowed the undergrowth to grow far too much. And what they've needed to do is to burn off the undergrowth, but without setting the whole forest on fire. In short, a controlled burn. And in our opinion, they've actually done a fairly good job of that until about a year ago, where we saw some horrendous policy mistakes, both on the stock market and the way that they pumped it up and the way they tried to deal with the collapse of the stock market, and also on the currency side.
And so, I mean, we talked about not painting emerging markets with a broad brush. I mean, so where does that leave you then in terms of sort of the markets which you favor as an investor?
So, because India is getting better, we have been increasing our weights in India. We are quite skeptical about China, so we're quite underweight China. We have a lot less money in China than we would have otherwise. But there are other countries in the world like Taiwan, which look kind of interesting to us, and even Russia. We like the Russian oils and various sectors in places like that. And even Brazil, which obviously has had a horrendous time in the last few months and years. You're starting to see some resolution of the political problems, which we think will eventually be very good for the markets.
So plenty for emerging market investors to do.
Always.
Thanks a lot, Arjun.
Thank you.